Any intelligent fool can make things bigger, more complex, and more violent. It takes a touch of genius and a lot of courage to move in the opposite direction. Albert Einstein, and he had most definitely a touch of genius and a lot of courage to move in opposite directions. Do you have the same? Are you tracking every day 10 to 15 minutes following price direction, which is what we look for? We look for trends and follow those. Those are what mean things to us, because invariably, again and again and again, the weekly vertical crossover is what we look for. Yes, they're two-day recrosses, as we say over and over again, not nearly as safe as the weekly vertical crossovers. So let's get everything ready and jump into these charts. By the way, special training for all of our subscribers. If you're not a subscriber, you won't get this training. You can go to chartingwealth.com and sign up for free. And guess what you're getting today? Use all the charts all the time. It's all about how we use all three charts to help us track most accurately what's happening with trends. Now, let's jump first into the S&P 500. Up for the day, 0.83, down for the day, 0.83%. We have a green up candle for the week as far as our Heikin Ashi candlestick goes, but we can see what we have happening with our derivative oscillator, losing a little bit of energy. Price percent oscillator is about flat. We'll see more as we get into it. We look at the two-day chart. It looks okay as far as the Heikin Ashi candlestick, as far as highs, lows, those types of things, the way Heikin Ashi candlesticks are calculated. And in fact, I'm going to make a note right now and put at the end of today's training, the Heikin Ashi candle. That's the most popular training we've ever put out. Heikin Ashi candlesticks. To understand, that means average pace in Japanese, much easier than your traditional candlestick methods, and I think much more effective. I want you to have that. We're going to put that at the end of today's video. Look at what we see happening on the two-day chart with the price percent oscillator going flat. Derivative oscillator still gaining a little bit of momentum, but as we hone in on the daily, well, the half day rather, we see up in the morning and then down in the afternoon. We've got a red, solid red spinning top going from green up to solid red. Look at the price percent oscillator, how it just dropped on that half-day chart. And look at what happened to the derivative oscillator, dropping too. Now, it did not quite cross over. It doesn't look like going down, but it sure lost a lot of energy and momentum. If you are in that trade at this point, you want to be paying close attention to that. You may have seen things starting to tumble after the morning session, and you may have already taken a profit, pulled that trade, and gotten out, but something to pay attention to. Focus very, very, very importantly to focus, very important to focus on the weekly and that two-day, particularly that two-day that's gone flat on you. So watch, see how the day goes on Wednesday and what decisions you make if you're in that practice trade. Now we're going to go to the Qs, down 1.89% for the day. We see our weekly trend line, price is still above that. We see that the derivative oscillator is, of course, headed, the price percent oscillator is headed down, as is the derivative oscillator. And we look at our two-day chart. What do we see going on there? Well, we had a bounce off, did we not? Had a bounce off going down. So that's interesting to see and watch. Now, of course, our weekly is still up. This is simply a bounce off, not enough energy to get us into a recross, and it's now bounced off. We'll see just how that goes. Is the bull trap finally being sprung? Is the market wearing out? Well, if you read the news, no, just the opposite. Again, we pay attention to the charts, not the noise. Look at that red spinning top. Do pay attention to that. What's going on the half-day chart? Well, of course, we talked about this, where we saw the crossover going down back on Monday afternoon. And then, of course, went down Tuesday morning and Tuesday afternoon, pushing through the 2-day trend line on this half-day chart. So again, we're continuing to watch, see what there is to see, and learn here. But again, just didn't have that crossover, did not occur. We talked about that when we had that prior candle ending on Friday the 7th. Didn't have that 2-day recross. So again, looking at the S&P, again, still trying to track up at that 2-day, lost a great deal of energy. So again, pay attention. Don't want to lose everything you've gained on that 2-day recross, and you may see some things. Again, we are used to volatility, particularly if we go back, just a few months, and the volatility we saw when this market crashed and then when it started to take off again, just the swings throughout the week were incredible. So again, we're used to that. We're going to stick with it. We're going to go through it. If you're not practice trading this, when you have opportunities to do so, you're missing a very important learning process. What do we see going on 20-year bonds? Down for the day 1.19%. Again, waiting to see if that weekly was going to cross over at the end of this prior week. It did not cross over, going up, slowed down, and now it appears to be accelerating, moving down. So we see a red down candle forming. Remember what we told you yesterday? Were we going to have a crossover going down? Just barely did that at the end of the day with all this down movement. Did you look to jump into a down move on TLT, or did you think the volatility was just too risky? Well, I hope at least you're practice trading and are, again, giving these things a shot to see what you can learn from practice trading them. We're not a stock calling service or an education firm. We want you to practice trade and learn with us. And of course, we have that fractional video about how to fractionally practice. Might also consider that. That's putting just a small amount of money on the line, buying a fractional share at one of the online brokers, and actually having just a tiny little bit of skin in the game, but to see how well you can really do. There's nothing like really tracking things to see the kind of skill set you can develop. So we did have a 2-day recross. You guys know 2-day recrosses are not my favorite. My favorite are the weekly vertical crossovers. Again, out of those, we have had 12 of the 13 work beautifully. But 2-day recrosses are definitely something for you to look at and potentially practice. Look at this 4-hour chart on 20-year bonds, down in the morning, down further in the afternoon. Look at that price percent oscillator, accelerating derivative oscillator. So hopefully you pulled the trigger on a practice trade this afternoon just to see what you could learn, if nothing else. Let's go to gold. We've seen gold hit all-time highs, but what happened to gold today? Hammered down, my friends. GLD down 5.37% for the day. Now, what do we see? This candle is red. It's got a long wick on top, little about the size of the candle wick on the bottom. It's a red open box, slow down in the up movement. Price right there on the weekly trend line. Look what happened to the weekly, though. It just canted over. Derivative oscillator lost momentum. That's a big down day. Look at that 2-day chart, which had been going up quite nicely. We saw the weakening there. We talked about that, and then it caught up, didn't it? And just hammered down. Price is below the 2-day, still above the weekly, but a lot of downward pressure hit on to precious metals today. That derivative oscillator dropped. Price percent oscillator hammering down. Go to the half day. And of course, you want to talk about portending. We did see things cross over. We then saw them slide sideways. That was crossing over. Well, actually, the first real red down candle we saw was back on Friday in the morning, followed by more down movement Friday afternoon, followed by indecisiveness on Monday, some down movement on Monday afternoon, and then, of course, the real hammer down on Tuesday morning and Tuesday afternoon. Blowing through in the morning, the 2-day trend line. How many of you were paying attention to the 2-day trend line and using that on gold, if you practice trading gold enough, as a potential trigger to pull a trade? Do you have that in your in your notes, your trader's notes, your trader's almanac? Are you keeping up with those kind of things? When people ask me, what is the reason for keeping these notes, for doing your daily market worksheets, your weekly market worksheets, and your trade worksheets? That's where you put down in writing what you're thinking, why you're doing things, and the lessons you've learned. Because each ETF and stock has its own personality. That is why over and over and over again, we beg you guys to practice trade this stuff, learn the lessons, figure out where the points are for you to pull trades so that you can maximize. We've made jumping in the easiest thing in the world for you with our weekly vertical crossovers and potentially the 2-day recrosses, which again, as I tell you guys, aren't my favorites. Plenty other things you can do and not take those risks with the 2 days, but people like them. And they work, and if they work 90% of the time because you backtracked and proved that with the stock or ETF you're interested in, great. But then you have to develop your rules on getting out. And of course, crossed and then landed, crossed the 2-day, and then in the afternoon landed on the weekly. So what's tomorrow going to hold on gold? I mean, just all of a sudden, ate up and more everything that it had originally accomplished with that prior movement. Let's see. We had our 2-day recross and our gold, slamming up, but you can see where we were not a 2-day recross. We had the weekly vertical crossover at the same time, the 2-day recrossed with it. And of course, we have done quite well during that whole time period. And again, so you've lost a little bit of value. Pay attention to what continues to move. Watch in particular that 2-day chart. Use the rules you've developed on how to use various trend lines and 2-day crossovers, 4-hour crossovers, what those mean to you, how much you put into them. Remember, that's the smallest chart of all. But it's the methods that you develop with the ETFs and stocks. Use gold as one to develop those on. We're not a stock calling service. We're an education firm. We want you to practice trade these things. But you see how well these charts work. And you can have exogenous events that occur. But what's so beautiful about these weekly vertical crossovers is invariably, when you have enough momentum to carry you through a weekly vertical crossover, they typically give you the ability to sustain these days when things hammer down because you have such a strong wave you've gotten in. That is the reason getting in later with 2-day recrosses or 4-hour crossovers going back in the direction of the weekly chart and or the 2-day, well, the 2-day also. What does that mean? Well, it means you're taking more risk. You don't have to. Folks, that's where we are as we end the day. Now, don't give up on gold. Pay attention to what it does tomorrow. If you're still in that trade, although you'd gotten a fair bit greedy because gold just kept booming up, but that's okay. Maybe you sold off half that position, so you're still in the green regardless. If you got in, you're way in the green still, but pay attention. Don't panic immediately. Continue to let the charts guide you and lead you. That's where we are as we end the day for all of our Big Four followers. If you hadn't purchased our book, Charting Your Way to Wealth, want to know more about what we do here every day, that's what you need to go do. Let's now move on to 3 more charts. Bitcoin, what do we see there? Down 2.77%. We still have a green up candle, but as we point, well, let's see. 11,922. We went over this yesterday. 11,845. So we have at a higher level this week so far. A little bit of weakness in the price percent oscillator, derivative oscillator still going up today. You can see where things have been topping here over. It's still green up candle, but the price percent oscillator, again, losing some more energy. Derivative oscillator too. What do we see on that half-day chart? Again, we've seen this sideways slide. We had the crossover on the half-day chart back on Friday morning, and it bumped up a little bit on Monday morning and Monday afternoon and then rotated back up. Never had enough energy to cross back over. So keep your eye on the prize. We had that 2-day recross. Things are still okay, but keep watching Bitcoin as things adjust with heavy metals. That can again affect things. Now, let's look at, well, that's just sort of a warning. Those things can be treated the same. Bitcoin, gold, silver. If the stock market is supposed to zoom, which it did not do. But again, allegedly these good reports allowed price adjustments. Yeah, right. Follow the charts, not the noise. What do we see going on with the Vanguard Real Estate Investment Trust? Down for the day 1.44%. We see things still, tracking sideways. Derivative oscillators about the same as it had been, but that price percent oscillator flat on the 2-day. Heading up on the weekly, sorry, should have started with that, losing a little bit of energy. 2 days flat, and then we see, look at what happened at the end of the day. We had that crossover going down. So see how long that sustained, and then how much more weakness you see in the 2-day. Don't want to lose what you gained on that 2-day recross. Although the weekly is still okay, hoping to see it push through that 200-period moving average line. That'd give you a little bit more of a boost that things might turn around. What do we see on oil? Down for the day 1.13%. Again, oil trying to move up this week, not tracking as high as it had last week. Price percent oscillator still moving up, derivative oscillator losing momentum. 2-day chart about flat. Red open box candle means a slowdown in the up movement forming. Still not hit the high it did back on the Tuesday, Wednesday 2-day candle of last week. Go to the half-day chart up in the morning. Loss in the afternoon. Lastly, I can't leave out silver. Man, did silver take it in the shorts. 13.59% down. Although so far this week reached a higher high, 27.39 over 26.90 of last week. But look at how much energy the price percent oscillator lost. Nowhere near the angle it had been going, and the derivative oscillator with those losses on Tuesday. 2-day chart went from a green up candle or something like that to a red spinning open box spinning top. Price percent oscillator heading down. Derivative oscillator still positive, but barely. And of course, that's where you see it bold down in the morning, crossing over, going down, and then in the afternoon again. Hope you're using your trend lines, applying the magic and the knowledge you've learned from those. But again, silver just slipping away, just getting hammered down. That's where we are, folks. As we end the day on Tuesday, go into Wednesday. Thank you so much for being with us. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Take that special training for all subscribers. All the charts, all the time.